Welcome to our essential guide on the South African Revenue Service, or SARS, auto-assessments for the 2025 tax season. In this video, we will outline what the auto-assessment process means to you as a taxpayer and then delve into frequently asked questions to provide further clarity and practical advice. Understanding this automated process is crucial for effective tax compliance. The South African Revenue Service officially commenced the 2025 tax season for individuals with auto-assessments, which are being issued from 7th of July to the 20th of July 2025. This automated process is part of SARS's system to streamline tax compliance by pre-filling tax returns using data sourced from third parties such as employers, banks, medical schemes, and retirement funds. Taxpayers selected for auto-assessment will receive notification via SMS or email from SARS indicating that their tax return is available for review. This can be accessed through SARS eFiling or through the SARS Mobi app. An auto-assessment represents a pre-calculated tax return based on the third-party data submitted to SARS. If the assessment appears accurate and aligns with your records, no further action is generally required on your part. For refunds of R100 or more, payment is typically processed within 72 hours, while amounts under R100 will be carried forward to the subsequent year. Sounds easy. However, it's imperative to verify the accuracy of the auto-assessment. Should you identify any discrepancies, such as omitted income or inaccurate medical or retirement fund information, you must reject the auto-assessment and proceed with manual filing of your return. For non-provisional taxpayers, this manual submission must be completed by the 20th of October. For taxpayers not selected for auto-assessment, the standard filing season for non-provisional taxpayers extends from 21st of July through to 20th of October of this year. This includes individuals with income sources beyond employment or investment returns, such as rental income, freelance earnings, or capital gains from asset sales. Provisional taxpayers have until the 19th of January 2026 to file their tax returns. If you don't receive an auto-assessment, it may be that your personal details are outdated or incomplete, or you might have a complex tax return with multiple sources of income. If you disagree with your auto-assessment, the following steps are recommended. Log into eFiling or the Mobi app. Review your pre-populated data within the third-party data certificate section. If errors are identified in the third-party data itself, such as your RP5 or medical aid certificate, you must first contact the relevant institution, such as your employer, your bank, or your medical aid, to fix this. The third party then needs to resubmit the corrected information to SARS, and once this data has been updated with SARS, you can then resubmit your corrected return before the stipulated deadline. We'll go into that in more detail on how to do it under the frequently asked questions. It's always prudent to retain all your supporting documents, as SARS may request verification. Now, let's address some frequently asked questions regarding SARS auto-assessments. An auto-assessment is an automatic tax assessment issued by SARS to selected taxpayers. SARS leverages data collected from employers, financial institutions, medical schemes, retirement annuity fund administrators, and other third-party data providers to generate this assessment automatically, without direct input from the taxpayer in the initial stage. You should receive an SMS or email notification from SARS informing you that you have been selected for auto-assessment, or that an assessment, or also called an ITA 34, has been issued. SARS has communicated that these notifications will be dispatched between the 7th of July and the 20th of July. For 2025 tax season, while SARS issues auto-assessment notifications to taxpayers between the 7th and 20th of July, there isn't a separate earlier deadline to formally decline an auto-assessment. If you receive an auto-assessment and disagree with its contents, perhaps it's incomplete or incorrect, your course of action is to file your own income tax return. This manual submission, which effectively overrides the auto-assessment, must be completed on or before 20th of October 2025. This date aligns with the standard filing deadline for non-provisional individual taxpayers. Therefore, while you may receive your auto-assessment early in July, the window to correct it by filing your own return extends until the general non-provisional tax deadline. It's advisable to act promptly if you intend to make changes, especially if a refund is due, as SARS processes auto-assessment refunds quickly. From an accounting perspective, it is strongly recommended against simply accepting your auto-assessment without a thorough review. There are inherent risks of inaccuracy, which could result in an incorrect tax liability or a missed opportunity for a legitimate refund. An auto-assessment may be inaccurate due to several factors. SARS may not have received all your tax certificates from relevant third parties. The tax certificates SARS has received may not be the most up-to-date versions. The auto-assessment will not incorporate certain deductions you may be entitled to claim, such as wear and tear allowance, home office expenses, donations to approved charities, travel expenses, or out-of-pocket medical expenses not covered by your medical aid. It also may not include income from other sources such as rental income, freelance work, or capital gains from asset sales, if these are not reported by third parties. If you have received a refund based on your auto-assessment, you can still file your comprehensive tax return once the broader tax season opens on the 21st of July. Filing a complete return allows you to include all applicable income and deductions, potentially optimizing your tax position. Upon submission of your revised return, SARS will issue a new assessment, an ITA 34. If your revised return includes additional deductions, this typically results in a lower tax liability, leading to an additional refund from SARS covering their difference. Conversely, if you declare additional income, a tax payment to SARS may be required. No, you are not exempt from penalties or legal action. It remains the taxpayer's ultimate responsibility to ensure all income and expenses are accurately reported to SARS. Should you accept an auto-assessment that fails to declare all your income, SARS retains the right to levy a penalty of up to 200% of the additional tax payable plus interest if an audit subsequently uncovers the undeclared income. Should you miss the deadline, you must submit a request for extension via eFiling, providing a valid justification for the late filing. For the 2025 tax year, SARS has broadened the scope of auto-assessments to include certain provisional taxpayers. However, this is by invitation. If you are a provisional taxpayer and have not received a notification from SARS inviting you to an auto-assessment, you must still file your provisional tax returns, your RP6, as usual, and your annual income return, ITR 12, by the provisional tax deadline of January the 19th, 2026. It is critical to ensure your personal and banking details are up to date with SARS. Incorrect banking details can delay or prevent refunds, and outdated contact information may mean you miss important notifications, including auto-assessment notices. You can update these details easily via SARS eFiling or the SARS Mobi app. On eFiling, navigate to My Profile and then Profile and Preference Setup to update your security contact details, or use the Update My Personal Income Tax Bank Account option for banking details. If both your email and cell phone number have changed and you cannot log in, you may need to contact the SARS call center or visit a branch by appointment. No, a change in personal administrative details like your address or phone number does not automatically mean you need to disagree with or reject your auto-assessment regarding your income and deductions. These are separate processes. You only need to disagree with your auto-assessment if the financial information, like the income or deductions, used to calculate your tax liability is incorrect or incomplete. So you would update your personal details separately, and then if the tax calculation itself is flawed, you would proceed to reject the auto-assessment and file your own return. We trust this information provides clarity on the 2025 SARS Auto-Assessment process, including how to manage your tax data and personal information. Diligent review of your assessment is paramount, and the timely submission of a corrected return, if necessary, is essential for compliance. For comprehensive and official information, always refer to the SARS website. And if you have any further questions, please feel free to post them in the comments section below, and we will answer them in a separate session.